All right, we've just been on a panel which has been very much focused on how private equity fits into the overall capital markets in New Zealand, and it's focused from who invests in it and why they invest, what's the need for it in New Zealand at the private company level, and how the managers go about their business, and there was a small part about what is the future of private equity, which we said was more of the same, but it would be substantially larger in 5 years' time. No, in fact, I think it will drive the floats on the New Zealand Stock Exchange. The Stock Exchange is actively marketing for floats at the moment, and with a number of things happening with the coalition government, where things are slightly less certain, just under a coalition, where the Overseas Investment Office has been beefed up, and where just general nationalism is in place. Capital from the home country is probably remained the same or grown. So I expect there'll be more investment into private companies, and I suppose speaking from Direct Capital's point of view, we like listing them on the stock exchange. It gives everyone quite a lot of flexibility. You know, some people can exit if they want to, and quite often older managers or owners want to do that. Some people can stay in. We as the fund are allowed to stay in. So effectively, if you look at a listing, you're not just selling your company in one go for one price. You're able to live on with it. You're able to hold your stake for another 5 or 10 years afterwards. So sometimes your 10% stake is worth more than the 40% you sold 10 years ago. So it's a really attractive thing for private companies.
For the overseas private equity funds, leverage is a real key part of their investment thesis, which isn't ordinarily the case with the New Zealand funds, who sort of run a less leveraged structure. In terms of terms and structures, more leverage. In terms of more technical points, so in the US and Europe, covenant-light financing structures are very common. We don't see those in Australia, New Zealand, or even Asia, but they're sort of creeping into the bigger deals, which are going to be financed directly into the US and European markets. So basically that means that instead of having a set of financial covenants, so financial metrics which are measured all the time, those are only measured part of the time, and there's a bit more scope to sort of run businesses on a more leveraged structure. It's really only in the bigger deals which are being financed directly in the global market. So, for example, Apax's acquisition of TradeMe in the New Zealand context, and in the Oz context, KKR's acquisition of MYOB. So those are deals which are too big for the banking markets in this part of the world. They go straight to the bigger markets, the US in both cases.
Look, I think there's a lot of capacity for New Zealand private equity going forward. We've seen a lot of growth over the last 10, 15 years as the industry has matured in New Zealand. But I think there's still a long way it can go. Our mid-market is the core of our economy. It's where we've got hundreds and millions of businesses sitting in that space. So the opportunity for investment is vast. And I think we've still got a relatively small community of private equity investors, and I think there's a long way they can go and continue to grow.
Well, look, first and foremost, we are always looking for opportunities where there's a sustainable position with the business. If it has a non-sustainability angle, we'll look at that up front and decide whether we even want to invest or not. So I guess the answer to my question, the answer to that question is that actually we don't tend to see conflict between sustainability and financial returns. In fact, we actually think they are complementary to each other and reinforce each other. And I guess a really good example of that was our investment in Icebreaker. Icebreaker was very much about sustainability around merino farming, and it was sustainability around production in the Asian markets. And if it hadn't had those angles to them, we probably wouldn't have invested, because we wouldn't have got the financial returns. So we got the financial returns because the sustainability existed.